and welcome back to Dividend Destiny, the home of international income investing. Today we're going to look at 3 essential investing books that are indispensable for beginners to dividend investing. The first one, The Intelligent Investor by Benjamin Graham. For the budding investor, particularly at the start of their journey, there are several key texts that are mandatory reading, and this book is certainly one of them. A hallmark of the discipline, Benjamin Graham famously served as a mentor to perhaps the greatest investor of all time, Warren Buffett, among countless others. The value investing ethos outlined in his book, despite relating to the financial environment of the 1970s, is so fundamental and rigorous that it poses relevance to all market situations and has stood the test of time. The steadfast doctrine of buying attractively priced stocks at prices lower than their net asset value, and with a margin of safety to provide additional protection, has created untold wealth not just for Graham in his lifetime, but in that of his students as well. Many investors, both past and present, have expressed their admiration for this book, including but not limited to Walter Schloss, William Ackman, and Michael Burry, to name a few. Despite this lofty praise, there are still many on Wall Street that continue to ignore Graham's principles. Recently, the US stock market has been perhaps more overvalued than at any point in its history, with blue chips trading at many multiples of their book value per share and at high earnings multiples as well. The wisdom set forth here would suggest selling to optimists and buying from pessimists, an attitude that is so often lost on the investing community. The principal element that one can take away from Graham's thesis is to approach the discipline as an owner, not a speculator, as there are several distinctions. In disregarding the undulations of Mr. Market and ignoring the stock price, something that the media focuses on almost exclusively, the budding investor values a business based on its ability to generate earnings, cash flow, and capital appreciation. Information is provided on how to accomplish this by focusing on financial statements and annual reports, and the criteria are reinforced with some regularity throughout the book. I think the chapter commentary and footnotes from investing expert Jason Zweig are highly useful, amusing, and informative. Although these observations are provided in the context of the dot-com bubble from 1999 to 2002, these principles can be applied retrospectively to the 2008 crash as well. Ultimately, the ideas and emotional mindset outlined by Graham will serve any investor well in any financial environment. It's just a shame that so few put these strategies into practice, instead getting caught up in the bubbles and the mania. Lastly, Graham emphasizes the role of being an active investor that participates in the running of their businesses. So many investors hold shares through passive funds and other instruments and neglect to get involved in AGMs to exercise voting rights. The importance of insisting on dividends is also a key aspect, as a substantial number of companies still refuse to return cash to shareholders. In summary, the investing principles described in this book will set the foundation for a strong portfolio with the ability to generate attractive returns and potentially build substantial wealth over time. For anyone with an interest in the discipline, this book is a compulsory addition to their library before delving into the financial markets. The second book is The Motley Fool $1 Million Portfolio, How to Build and Grow a Panic-Proof Investment Portfolio by David and Tom Gardner. As is common with most people that invest, most of us wish that we'd started 10 years before we did. An abundance of time, a long-term mindset, and the magic of compounding are frankly remarkable forces in the world of investing, and the earlier one starts, the better. I would propose that it's never too late, and the $1 Million Portfolio by the Gardner brothers serves as an ideal companion for both novice and more seasoned investors. The masterminds behind The Motley Fool deliver an accessible, easy to understand and highly informative guide on what can seem a murky and complicated way of building wealth to newcomers. Several investing strategies are analysed in detail and supported by a host of practical examples. Although the book was published in 2011, the bulk of knowledge and advice is timeless and will hold true no matter what the economic landscape. Each chapter focuses on a specific philosophy, be that dividend stocks, value investing in the style of Warren Buffett and Benjamin Graham, international securities, small cap gems, or the use of mutual and exchange traded funds. Our own thesis here at Dividend Destiny revolves around acquiring income producing equities with growing income streams, particularly those trading at cheap prices relative to book value. I found a great deal of useful and pertinent information in the middle chapters of the book in this regard. Crucially, some facts and figures help to reinforce the philosophy and indicate the potential returns that might be expected in the long run. Asset allocation and diversification to help mitigate unsystematic risk are outlined in a significant amount of detail, with some example portfolio weightings based on your age and risk tolerance. A useful appendix discusses the pros and cons of mutual funds and their selection, if you'd prefer a more hands-off approach. Given the pitiful interest rates on savings accounts, I would strongly advise anyone to invest their risk capital in equities and strive towards developing a 7-figure portfolio over time. Eventually, the passive income generated may be used to fund your lifestyle, charitable interests, bills, expenses, and other commitments. This book is well written and humorous at times, which helps the reader digest the often complex mechanics of the market. My only critique would be the constant referencing towards the Motley Fool's products and services. Regardless, the wealth generated in applying the strategies in this book will more than pay for the asking price, and the knowledge within should be seen as an investment in itself. A fundamental objective, in my view, is to continue to pursue education about investing, no matter how advanced you are, and the reading list highlights some influential texts from the greatest financial minds of all time. It's a shame that these methods are not taught more widely in schools to help young people understand the realities of generating wealth and financial responsibility. In my opinion, this book is an essential part of the investing curriculum, and I thoroughly recommend it. The last book we're going to examine in this video is Rich Dad Poor Dad, What the Rich Teach Their Kids About Money That the Poor and Middle Class Do Not, by Robert Kiyosaki. I have mixed feelings on this book. In hindsight, it should have been one of the first I ever read on investing and personal finance. It's a bestseller and probably one of the best of sellers in its field. This book describes several key financial principles from Robert Kiyosaki using a narrative-driven approach. This particular edition includes updates and commentary on the current financial and political landscape, given the 2 decades that have passed since the first edition came out in 1997. Robert draws on anecdotes and parables from his upbringing and adult life, making comparisons between his biological, academically gifted but financially illiterate poor dad and his wealthy rich dad, the father of a close childhood friend. In these recollections, Rich Dad explains several monetary principles that might on the surface seem straightforward, yet most people are simply unaware of the concepts. It is an abomination that this knowledge is not taught to our young people in schools. As I've said before, financial education should be as much a part of the curriculum as English, maths and science. We are currently allowing people to move into the workforce without the necessary awareness of how to create a business, invest wisely for retirement, or even distinguish between assets and liabilities properly. I count myself fortunate that I stumbled across finance and investing after losing only a decade or so of time. The reality for many people is that they get to retirement age and realize that their pension infrastructure is wholly inadequate for their needs and possess neither the time or youth to address these challenges. The principle of acquiring assets such as property, stocks and shares, bonds, etc., that generate all-important cash flow is perhaps the biggest takeaway from the book in my view. This passive income can then be used to cover luxuries or personal expenses as the individual sees fit. With time, financial freedom and independence can be attained. These principles are essential for building freedom and wealth, which can then be enjoyed in a tremendous number of ways such as travel, philanthropy, setting up more businesses, looking after your family, and whatever you can dream up. It is evident that this edition of the book is geared towards young adults given the study session sections after each chapter. In what is a fairly mute criticism, I think that these sections only serve to double the word count of the book, as they merely reiterate the chapter in question, but in a third-person voice. I feel that nothing was really contributed in these sections bar the questions Robert poses at the end, but nevertheless the repetition may help reinforce these key messages, especially for young readers. Robert has received substantial criticism from different quarters for some of the ideas in this book, particularly those around taxation and insider trading. It doesn't help that at times Robert's tone is very strident and forthright, which may put people off or give a negative impression. What can't be in doubt is the fact that Robert has been there and done it, made his fortune, and is simply putting his strategies and ideas out there. The scathing criticism from John T. Reed is worth reading, though, so that you can form your own view, but it doesn't take away from the fact that certain principles are sacrosanct. Personally, I found there to be an overemphasis on real estate investing, and disagree with several perspectives, for example, the purchasing of stocks at IPOs, initial public offerings, and engagement in other high-risk speculative opportunities as an older person that has missed the compound interest train seems to me to be irresponsible advice. These activities may be appropriate for someone with substantial risk capital like Mr. Kiyosaki, but are certainly not for the inexperienced older investor in my view. Despite that, the earlier principles in the book on assets, liabilities, cash flow and taxation are absolutely indispensable. I would certainly suggest this book as a useful starting point for those seeking financial education and knowledge. However, the book is short on more advanced, specific and in-depth information on elements such as stock valuation, fundamental and technical analysis, options trading and the like. For these topics, there are many other books that can provide the necessary depth and detail. That doesn't take away from the fact that as a psychological primer, Rich Dad Poor Dad is excellent. I hope you enjoyed that analysis of 3 excellent investing books for the beginner. You've been watching Dividend Destiny.